Personally, I've been dreaming of this moment for 3 years. I had a confession, which is I go to bed every night, I dream of another recession. I dream of another moment like this. Why? Because people don't seem to maybe remember, but the 30s depression, the depression in the 30s, wasn't just about a market crash. There were some people who were prepared to make money from that crash. And I think anybody can do that. It isn't just for some people in the elite. Anybody can actually make money. It's an opportunity. What I would say to everybody is get prepared. This is not a time right now to wishful thinking the government is going to sort things out. The governments don't rule the world. Goldman Sachs rules the world. The governments don't rule the world. Goldman Sachs rules the world.
Self-destruct sequence activated. 3, 2, 1.
Is this your homework, Larry?
Ask him about the car, man.
Is this yours, Larry? Is this your homework, Larry?
Is that your car out front?
Is this your homework, Larry?
We know it's his fucking homework. Where's the fucking money, you little brat?
No relief in sight for crypto as Bitcoin erases all of its 2021 gains. Bitcoin dipping below 27,000 today, its lowest level in 16 months. A lot to break down on this because it's more than just the story that we've been tracking with Terra and Luna.
This event is probably, and I tweeted this last night, the most destructive wealth event in the history of crypto, with probably about $50 billion just wiped out.
This happens every couple of years in crypto, certainly, and in tech more generally.
The promise of what Luna was doing, or UST, was to offer an algorithmic stablecoin that did not depend upon legacy financial infrastructure.
The issuers of stablecoins maintain their $1 peg by creating or burning a certain number of tokens to correlate with their collateral. The safest stablecoins do so simply by holding an equal amount of dollars in a bank. So $50 million in the bank corresponding to 50 million coins.
Shockingly, the founder, Do Kwon, he keeps tweeting, steady lads, hang tight, stay strong, lunatics. I'm going to come up with a solution, but you want your dollar to be worth $1, don't you?
We're seeing Terra having broken the buck and Tether under some pressure as well, which is the largest one.
I was one of the founders of Tether. We invented the stable coin.
It's got about 90 billion of dollars behind it, over 50 trillion of transactional volume. It's the most used.
I wouldn't characterize it at this scale as a real threat to financial stability, but they're growing very rapidly.
But since stablecoins are generally unregulated, stablecoin issuers can also hold other assets rather than just cash in a bank. For example, Tether, the first ever stablecoin, recently unveiled it only holds about 75% of its portfolio in cash and cash equivalents. Only about 5% of its collateral is actually in cold hard cash. The majority is in short-term corporate debt known as commercial paper, and other things like gold and bonds that can go down in value. That introduces some risk, of course, and Tether has also never been audited.
As I told you last month, Tether has more than
$60 billion
in reserve assets. And as of their last disclosure, roughly half of that is commercial paper, which would make Tether one of the largest holders of commercial paper on Earth. But here's the problem. I know a lot of people in this market, and nobody in the commercial paper world that I know seems to have ever heard of these guys. Tether says they're buying this paper through bank intermediaries, so maybe that's why nobody's heard of them?
It was an experiment. It got very big, too big, and unfortunately the experiment failed. It's imploded, and it's wrecking the markets right now when they were already in a vulnerable state.
Across different desks, I have heard that there is pressure to get out of stable coins right now because they are worried about the risk.
And they present the same kind of risks that we have known for centuries in connection with bank runs.
This is a big sea change. We're going to see now that, these old systems that people were playing with, these kind of Ponzi economics, a lot of DeFi that never really generated any value, that was very self-referential, it's going away. And I think we're going to return to, this is when the scammers leave, the people who are playing games, and that all goes away. Everyone's been cashed out, zeroed out, if you will. And we're going to go back to fundamental networks that actually drive value for their users.
Sentiment around Bitcoin and the entire crypto market is completely in the dumps right now. Price is down more than 56% from the $69,000 all-time high, and extreme fear is prevalent as the scam coins, cash grabs, and sucker traps finally begin to die off.
My system had changed your life.
Doubling our income usually involves years of struggle and sacrifice.
Let me show you how to make the fortune you have always dreamed about.
After breaking bearish out of this nearly 5-month-long bear flag, the price of Bitcoin is currently sitting at prices it hasn't seen in nearly 18 months, successfully breaking the wills of the more than 55% of current Bitcoin holders that got into this market anytime between here and here. Unfortunately for these folks, the bears look like they're in full control, and it's looking like prices are once again about to head lower. But how much lower? Well, price has been consolidating near the $33.4 thousand level in this smaller bear flag here for about a week. This pattern has a measured move target all the way down at $19.92 thousand, which is about 71% down from the all-time high. Now, I know this sounds rough, but chances are it's going to get a bit worse before it gets better. Next, we have USDT dominance. Now, we all know that this has a strong inverse correlation to the price of Bitcoin, but this is only as long as Tether can remain solvent. It just broke out of this bull flag pattern that has a 1-to-1 measured move from the April 3rd low all the way up over 11.3%. Now, I've been saying for over a year now that the $10.6 to $8.9 thousand range is my primary support level where I'm finding the most technical confluence for Bitcoin to find a bottom. Now, there's a lot of confluence at this price range, and it's a pretty interesting price target due to a number of reasons. Also, if we take the fixed range volume profile tool from December of 2017, when the CME got into Bitcoin to current price action, the point of control is right within this range at $9.3 thousand. Also, if Bitcoin is able to find support here and fall within our range around $9.615 thousand, it really does create a pretty interesting bullish scenario and could be confirmed if we see price find support right here at $9.6 thousand. Finding support at this level would form this valid bullish harmonic pattern that gives us a 1.272 fib extension of XA that is all the way up at $139.923 thousand, with the 1.618 all the way up at $371.83 thousand. But keeping all of this in mind, we are obviously always keeping an eye out for any signs of reversal above major support levels.
And it's been reported that one of the biggest bulls and advocates of Bitcoin, Michael Saylor, would be in trouble if Bitcoin fell below 21K. First reported by Fortune.com, MicroStrategy's CFO, Phong Le, revealed in the company's first quarter earnings call on Tuesday that if Bitcoin's price falls below 21,000, or around 50% from their current levels, it'll be forced to pony up more cryptocurrency to back up its $205 million Bitcoin collateralized loan with Silvergate Bank that was used to buy Bitcoin in the first place.
Now, I don't think it's likely that price falls below $21,000, let alone $16.3 thousand in the near term before finding a local bottom, but it damn well might. Things start to get pretty scary though if price falls below $6,000, and as crazy as it sounds, it's far from impossible and it cannot be ruled out. Now, regardless of what on-chain data might try to persuade you to believe, the futures market controls the price of Bitcoin, and where the USD liquidity goes, so too does the Bitcoin price.
But all jokes aside, Bitcoin would need to fall all the way to $3,562 before the company would run out of enough of the crypto to pledge for that loan.
Now, I'm not at all saying that prices are headed this low, but you can't ignore the fact that there is a considerable amount of money to be made from a forced liquidation of MicroStrategy's leveraged Bitcoin position. This provides considerable and genuine incentive for causing this kind of destruction, and if the risk is worth the reward, you can all but guarantee that a plan to do so is already in motion. And then there's the house of cards that is Tether. Now, we've gone over this drama in a couple of videos in the past, but it's something that we're really getting to the point we can no longer ignore. Tether's tentacles are so deeply woven into the entire crypto space. Simply owning Bitcoin, or any other altcoin for that matter, implies that you are sharing the risk of unsecured debt with the company Tether, in the form of commercial paper loans, possibly to Chinese real estate corporations, who are literally in the news every week because they are defaulting on their dollar-backed loans. Now, default on these short-term loans, if they are from Tether, who denies it adamantly, would severely affect Tether's liquid reserves, causing them to lose their dollar peg, and there would be another far more catastrophic stablecoin collapse that could reach into every wallet of the entire ecosystem.
You have Coinbase shares down another 9.5% pre-market after the stock was absolutely slaughtered yesterday. Look at this note from Goldman Sachs. Will Nance dropping this one into my email box, saying, we believe Coinbase is unlikely to return to recent levels of profitability in the near term, absent a significant increase in crypto prices or volatility.
Unusual activity, Pete. And I see you have three stocks led by arguably the stock of the day.
Yes.
You know
I'm going to start with Coinbase, Scott.
There you go.
Yeah, absolutely. It's already down 20+%, and they just continue. If you're looking for a bounce, at least the options community does not seem to think that there is one, Scott. They're buying 15,000 of Friday's expiring 55 strike call puts, rather, when the stock was trading right around 55.5. So that gives you a little bit of an idea that there isn't anything positive yet to come that folks are expecting right now. Those puts were being bought for about $3.50.
In a 10Q filing this week, Coinbase disclosed, quote, because custodially held crypto accounts may be considered property of a bankruptcy estate, in the event of a bankruptcy, the crypto assets we hold in custody on behalf of our customers could be subject to bankruptcy proceedings, and such customers could be treated as our general unsecured creditors. After that, CEO Brian Armstrong tweeting, quote, your funds are safe at Coinbase just as they've always been. We have no risk of bankruptcy.
Coinbase is basically asking retail cryptocurrency investors to take them at their word when they really need to be aware of this risk.
And is that just for retail investors at Coinbase, or is that also for institutional investors at Coinbase?
So we have two products. We have a custody product that is held in a trust company, segregated assets on the blockchain. Those are held in customer name, no risk. Everything else is held in a trading account in which we segregate the assets, as I mentioned, in our ledgers. They're held in the customer's name. They are operationally and legally secure, but there is no case law for assets held outside of a trust company.
Whose products are in that custody product relative to this other group?
We have a custody product that we offer to institutions, high net worth individuals who choose to have assets in custody. That product is available for all customers who choose to access it. And then we also offer trading products.
Hold on to your horses, guys. This one is gonna get wild.
Yeah, absolutely.